This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
All right, so let's get things kicked off. Okay, first things first, what I want to talk about is, do you remember when Bitcoin was down at 55, 62, 58, and there was this huge fear? And what I was saying is that volatility is the price of admission to this asset. Well, here we are just a few weeks later, and right now, Bitcoin today has been as high as $71,742. I think 3 weeks ago, on May 2nd, so call it 4 weeks ago, we could have bought Bitcoin for around $56,500. That was the low. Remember what I've told you is that when you're in a bull market, so in a bull market, if you're a short-term investor, when fear comes into the market, you buy the dips, and when euphoria comes into the market, you sell the rips. It's a very simple formula. So now here we are trading up at 71,000 and change, pushing up against resistance, which is at 74,000. And a lot of people that call themselves traders are going to come in here and buy at 71, 72 and make a bet that Bitcoin's going to break out and rip higher. Now, it's not to say that it won't. It might. But breakouts generally are a low probability play when you're buying right at resistance in the hope that you're going to time the breakout right. And this is the one breakout that's going to make it. In a bull market, really hear me when I tell you this. In a bull market, if you are trading, you buy on the down days and sell on the up days. Now, for us as investors, as long-term investors, I don't care how many times it goes up against resistance. I could care less. The longer Bitcoin trades sideways in this zone of consolidation, which is essentially 62 to 74, the wider the base, the bigger the breakout, which is another rule. The longer something trades sideways within a narrow range, the bigger the breakout, assuming that it's an upside breakout, which I believe, of course, it will be because we are in the early stages of this bull market. However, as a trader, I don't want to be buying right next to resistance. It doesn't make any sense because I don't know for sure if this particular attempt, the price is going to break out. So do you understand that different mindsets that you need to hold in your head at the same time, dependent upon whether you're working with your short-term stack or your long-term stack? A lot of people get those two confused and they start making short-term decisions based on their long-term stuff and long-term decisions based on their short-term stuff, which is why I've always recommended separating your accounts. You have one account for your long-term investments. I don't care if it's stocks or if it's crypto, and you have a separate account for your trading, whether it's for your stocks or for your crypto, separate wallet, separate firm that you work with. You must keep those two separated or you'll do dumb things with your money. And how do I know? Because I've done plenty of dumb things with my money. It took a lot of money for me to learn that those two have to be separated. This morning, we saw a weak ADP private payroll number, which came in at 152,000, fewer than the downwardly revised 188,000 in April, and below the Dow Jones consensus of 175. So this immediately has caused a rally in bond prices. So when yields go down, bond prices go up. And when the street is afraid of an economic contraction, they make a bet that interest rates are going to come down. And the way they express that bet in the market is by buying bonds, because they believe that the price of the bond will go up, interest rates go down. And we've seen that. Right now, the 10-year is trading at 4.293%. It was at 4.5% earlier, and then up at 5% earlier this year. So if you then look at oil prices, oil's come down a lot. It's trading at 73 and change. And you can see that the street is positioning itself for a softening economy. Now, is the economy going to soften or not? There are men and women with brains the size of Texas that get that call wrong every single day about, are we going to have a recession? Are we going to have a slowdown? I don't know. Here's what I do know. I know that markets love to climb a wall of worry. I know that the most important lever in financial markets is the price of money, interest rates, and monetary printing and or spending, right? Those are the real levers that move asset values more than anything else. How do I know that's true? Well, look at what happened during COVID. During COVID, we had a complete cessation of economic activity. And yeah, we had a big drawdown for a month or two. And then we had one of the biggest bull markets I've seen of my life. Why? Because interest rates went down to zero and the United States government flooded the entire country with money. So it's important to understand that monetary policy will override just about anything. So why am I bringing that up? I'm bringing that up because what I want you to understand is this larger macro picture that's driving the value of these assets that I talked to you about, specifically digital assets, and even more specifically, Bitcoin. Bitcoin is being driven by monetary debasement. Monetary debasement is when a government reduces the value of its currency by issuing too much paper currency. That's debasement. You're reducing the value of the currency. Now, generally, we debase at a rate of 1.5% to 2% a year. It's a slow and steady rate. It's really not a big deal for most people, and the economy can handle it. But when you start debasing at 5%, 6%, 7%, 8%, 9%, and you do it for years and years and years, and it compounds, similar to what happened in the 1970s, you destroy the value of the money and you destroy the living standards of most of your population. Now, back in the 1970s, the way that people saved themselves or protected themselves from that monetary debasement was by buying gold. Now, this decade, people are doing the same thing, but as you know, what I'm going to say next is that Bitcoin is just a much better gold. It's the next generation's gold. When my son is 20, 25, 30, and he's looking to protect his assets from monetary debasement, do you think he's going to buy Bitcoin or do you think he's going to buy gold? My son is going to grow up in a world where everything was digital. He's never going to have known of an analog world. He's never going to have known of a world where AI was not ever present. He's never going to know a world where Bitcoin wasn't a part of the zeitgeist. And so this is really important to look at when you're allocating capital into non-traditional investments like gold, like Bitcoin, like art, things like that. You have to look at the long-term demand drivers for that asset. So as I look at the demographics of gold, the average gold owner is in their mid-50s. It skews much, much older, whereas the average Bitcoin owner is in their 20s and 30s. So if you look at where the money is flowing to, it's flowing into that younger generation. That younger generation is going to inherit $68 trillion. That younger generation is going to harness AI. That younger generation is going to reap the benefits of AI productivity, which means that their wealth should theoretically eclipse ours. And you have to ask yourself, where's that wealth going to go? Is that going to go into gold, or is a portion of that going to go into Bitcoin? And I'm making a long-term bet that a portion of that is going into Bitcoin. I just wanted to give you that intellectual framework for how to think about the adoption cycle for Bitcoin and for you to understand how early we are in the adoption cycle for Bitcoin. I also want you to have a very clear picture that this decade that we're in right now, I believe financial historians will look back and call it the decade of debasement. And why do I believe that? We are running $2 trillion annual deficits right now. We're not in a war and we're not in a recession. So we have 5 trillion coming in tax receipts and 7 trillion going out. That's insane. A 40% deficit is insane. And so the only way that you can keep that up is by issuing more treasuries. And again, remember what I said, when you issue more treasuries, you're essentially issuing more money. And so what does that do? It debases the value of all the other money out there. Think about this. If Apple Computer issued 20% more shares every single year without a corresponding increase in earnings, it would be devaluing the company consistently by 20% every single year. Well, the same is true of our money, and that debasement shows up in inflation, where the cost of everything increases. It is incumbent upon you to protect yourself from this. No one is going to save you. There's no one from the government that's going to tell you, buy some Bitcoin, buy some gold, own some real estate, own hard assets to protect yourself from what we're going to do to your currency. No one is going to tell you that. In my opinion, a 5 to 10% allocation to Bitcoin will more than shelter the value of the rest of your assets from the rapacious effects of inflation. And that's my recommendation. If you already have assets, if you already have some wealth, you need to own some Bitcoin in order to protect yourself from this ongoing pace of debasement. I just don't see an end to. And especially if we go into a recession, if there is a slowdown, well, they only know one way to fix a slowdown: lower interest rates and spend more federal money. That's it. Those are the only two buttons that they know how to push. So just bear that in mind. Know that we are going to see more debasement of the dollar ahead. Now, if you like these kinds of updates, the best place to go to get these in a written format, I put out at least 3 commentaries a week, is TawariResearchGroup.com. It's the only place where I post my research, and it's for free. You can, right now, I have a free e-letter called the Digital Asset Daily. If you go to TawariResearchGroup.com, sign up there. Again, it's free to sign up, and then you'll get access to my commentary that I put out at least 3 times a week. Now, the other thing I wanted to remind you of is that on June 26, 8 p.m. Eastern, I'm going to be launching my brand new newsletter service, where I will be giving my recommendations. If you are already on the list at TawariResearchGroup.com, then you are on the list for that event. The only way to access that event is to go to TawariResearchGroup.com and join my free e-letter, and then you will get an invite for my June 26 event at 8 p.m. Eastern. That'll be on June 26. Okay, the other thing I want to talk about right now is SAB 121. So SAB 121 was an accounting rule put out by the SEC, essentially says that banks can't custody crypto assets. It says that if you custody a crypto asset, you have to put an equal amount up of your own assets as collateral, which is insane. And I'll explain why it's insane. When you custody an asset, let's say I custody your asset. Well, I have your asset. There is no counterparty risk. So there's no need for me to put up collateral if I already own your asset. Does that make sense? So what the SEC is saying to banks is, if you want to custody Bitcoin, you've got to put an equal amount of other capital up in order to custody it. There is no bank that will agree to do that. It's ludicrous. So it's essentially a ban on banks being able to custody crypto. Now, both the House of Representatives and the Senate voted to repeal Special Accounting Bulletin 121, which they did. President Biden had threatened to veto it. And then when President Trump came out and said that he was pro-crypto, President Biden then backed off and started making noises that he wouldn't veto it. He didn't explicitly say that, but he said that, we want to be supportive of crypto and keep crypto here. However, I think it was the day or 2 days after President Trump was convicted in New York in that hush money trial, guess what happened? President Biden came out and vetoed SAB 121. I guess in his mind, he's thinking that President Trump is not a threat. I think that's a mistake. I think President Trump is. But I think President Biden has made a huge tactical error in standing in the way of further crypto adoption. The 2 most powerful forces in America during an election year are Wall Street and voters, right? Swing voters. Many crypto owners they're essentially politically agnostic, right? They vote with their pocketbook, and they're single issue voters. Are you pro crypto or you are against crypto? When you have single issue voters that have money and that are on both sides of the political spectrum, it is a mistake to disenfranchise them. Now, there are 50 million Americans that own crypto. Now, yes, some are hardcore Dems, some are hardcore Repubs, but a big bunch of them in the middle, they'll go either way. They'll vote with their pocketbook. So for President Biden to come out against that massive voting bloc, it's a huge mistake. It's a huge tactical error. And who is ever advising him, I mean, he might have lost the election with that decision. So you have that issue. And then the other issue that you have is you're going up against moneyed interests on Wall Street. Wall Street clearly wants this asset. They want to build products around this asset. They want to custody this asset because they know they can make billions of dollars in fees. So going against Wall Street, going against 50 million voters in an election year is not smart. Will President Trump win? I think that crypto could be a decisive issue in this election, which is insane to think about. When I think about when I first started writing about Bitcoin in 2016 and talked about how important and powerful this asset would be, and just how virtually everyone just dismissed it. And look at where we are now in 2024. Bitcoin could be the deciding factor as to who sits in the Oval Office. I mean, just marvel at that. That is absolutely unbelievable that we have entered that point. Okay, now somebody had asked me about the altcoins. Friends, every cycle I go through this. They're like, yeah, Tawari, but what about the goddamn altcoins or something to that effect? So look, let me explain again. I've explained this many, many times about how this works. First, the money comes into Bitcoin, then it goes into Ethereum, then it goes into some of the bigger altcoins. And then when Bitcoin has had its big run and ETH has had its big run, the money starts looking for more alpha, and it goes further down the chain into the smaller altcoins. And that's when you get that massive run in the altcoins. Now, when the altcoins are underperforming, like now, is when I get excited about the altcoins. And there's certain subsectors of the altcoins that I'm looking at right now that are getting murdered. But to me, they're super interesting because no one is looking at them. But as we move down that risk cycle and we go into the latter part of this year, you will see the altcoins boom. But it's not going to happen just because, we want it to happen right now. That's just not the nature of how I've seen capital flow through this ecosystem in the past. Okay, I covered a lot of ground in a very short period of time, but I think that's it. Do we have any questions? If I position myself with Bitcoin, plan to withdraw some lifestyle chips, if Bitcoin doesn't go to my target, I don't mess it up so I can live a more comfortable life. It's important to have ranges of targets. So for instance, on BTC, if BTC is not at 150K by at least June or July, then you should think about scaling out some and taking some chips off the table because we should be there by June or July. Look, that's just an answer off the top of my head, right? So a lot of it just depends on the trading. But I would expect us to be there by June or July and then going into kind of this blow-off top area somewhere in October or November of next year. So look at it really from a timing standpoint. That'll be a solid year after the halving, where we should have some really massive gains in BTC by then. See, for those of you who are in PB, will there be anything special offered to your new service? Yes, I'm going to offer folks that were with me before a better pricing tier. And then I'm also going to cover all of the old recommendations from Palm Beach Confidential in my new service. What if Biden gets reelected? Well, here's the thing. I just want to get this across to everybody. I'm not a political person. My work is for everyone. I don't care if you're a Dem or a Republican. I want to focus on what unifies us, which is we all want better lives, right? We want to make better decisions. We want to take care of our families. We want to take care of ourselves. We want to have good lives and good financial lives. So, look, whoever gets elected, there's going to be more government spending. And while more government spending is not great for the United States, it's not great for the value of our dollars, we are positioned to profit from that. So if there's more government spending, our Bitcoin, our Ethereum, our crypto assets, our risk assets are going to go up tremendously. June of this year, full throttle, June 26. Question is, should I use gains I make off BTC to buy altcoins? Look, remember, altcoins can go to zero. You think about what your allocation should be to the altcoin space. Think about how much of your capital are you okay with going to zero. So for some, it might be 5% of their trading capital. For some, it might be 3%. For some, it might be 7%. That all depends on you. The key with altcoins is you got to treat them like venture investments. So it means that you use small, uniform position sizes across the portfolio. Now, why do you use uniform position sizes? Because you don't want to under-own a winner or over-own a loser. And so that's why you use a uniform position size. And you use small positions because these things can 500x, 100x, 300x, 10, 20, 30, 40, 50x. You don't need to put an enormous amount of money in. What you do need is to have a good research process for picking them. And you need to have a fairly large amount of them. And again, you treat them like a venture bet. Any venture bet can go to zero. So once you get clear as to, okay, this is how much capital I'd be prepared to lose and go to zero and not lose sleep over, then you will take that and then break that down into equal amounts across the amount of coins that you think that you're going to own, maybe whether it's 10, 20, 15, or 6. Tika for president, 1, I wasn't born here, so that couldn't happen. But 2, I would never, ever, ever want the job. Okay, this is a really good question. Do you believe BTC is facing diminishing returns or is likely to grow exponentially? It depends upon what happens in the world. If we have out of control, runaway inflation, just complete abandonment of any fiscal restraint, you can see exponential moves higher in Bitcoin. I mean, exponential moves higher in Bitcoin. You will see higher movements in Bitcoin without necessarily this kind of worst case fiscal nightmare, but you won't see the geometric gains that we saw, let's say in 2016, 2017, 2018, 2019. So again, not the greatest answer in the world, but it really depends. I think we see at least 150K this year. If the wheels fall off financially, massive financial insecurity, crazy, insane deficits, 9, 10, 11% inflation, then yeah, you could see $500,000 Bitcoin, $700,000 Bitcoin quick. However, I don't think that happens this cycle. Question is, can we subscribe to service in advance of the June 26th event? I haven't made any provision for that. Enough people are interested in that. That may be something I could do. So you can shoot me an email at jointika@gmail.com if you have an interest in a pre-subscription before I do my launch. There's a question here. Am I going to do pre-IPO investing? I don't think so, because the regulatory overhang from that is just so extreme. I am so emotionally burnt out from my experience in that area because of the person that Legacy hired to run that newsletter for me. I'm like a kid who just burned his hand on a stove. I just don't even want to go near stoves anymore. It was such an awful experience for me. How do you turn BTC into fiat? Send it to Coinbase and sell it for dollars. Question is, when I start my new service and review the PB portfolio, will I be letting us know if it's still a good project to own or if we should sell and reallocate? Yes. I will be doing a deep dive on every coin and letting you know where we stand on all of them, whether we should hold them, whether we should sell them, whether we should buy more. The question is, do you know how many alts you're going to recommend? I don't know. I'm sorry. I don't have a good read on that. Question is it possible to contact you privately regarding specific questions through your website? I don't have a customer service person yet. It's somebody that I'm going to have to hire. I've got 600 emails in my inbox already. And I personally can't go through and answer every single one of them. So one of the things I'm going to ask my new subscribers is to be a little patient with me, because I've got to build a customer service team, and that's just going to take a little bit of time. Don't have anything right now to say about XRP, although XRP will probably get an ETF at some point, and that will be very, very bullish. All right, I think that's it. All right, friends, I want to thank you so much for the wonderful questions, and I really appreciate you being here. I'm going to say, look, just be rational. Understand that there is an ebb and there is a flow to markets. Understand that we're still in the very early part of this bull market, and there is an absolute fortune in front of us to be made. Friends, thank you so much for being here. As I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.